Welcome to the Bull Strangle strategy. Our approach combines stock ownership with systematic option selling to generate income while maintaining long-term market exposure. Every trade follows a repeatable process built around stock selection, premium collection, risk management, and disciplined execution. Let's get started. When most investors think about market capitalization, they simply think about company size. But for option sellers, market cap tells us much more than that. As part of developing my stock ranking system, I analyzed thousands of option selling opportunities to determine which stock characteristics were associated with higher returns, better win rates, and fewer large losses. One factor that consistently stood out was market capitalization. Market capitalization is simply the total value of a company's outstanding shares. It generally falls into four categories. Small cap is under 10 billion, mid cap is 10 to 50 billion, large cap 50 to 150 billion, and mega cap over 150 billion. These categories don't predict whether a stock will rise or fall, but they often tell us a great deal about liquidity, stability, institutional ownership, and option market quality. Each market cap category has its own strengths and weaknesses. Small cap stocks often experience larger price swings. Those larger moves can produce attractive option premiums, but they also increase the risk of significant losses. Large and mega cap companies typically offer greater stability, excellent liquidity, and more active options markets, often producing more consistent results. That doesn't mean large companies are always the best choice. One of the biggest lessons from my research is that no single metric should determine whether a stock is a good candidate. Market capitalization is simply one piece of a much larger puzzle. That's why market capitalization is only one of 7 metrics in my stock ranking system. The complete ranking evaluates price relative to average true range, or ATR, institutional ownership, implied volatility versus historical volatility, market capitalization, stock price, and trend structure. Each contributes a small statistical advantage. The objective isn't to find the perfect stock, it's to improve the probability of success by identifying companies that combine attractive option premiums with overall low risk. Market cap helps improve those odds, but only when combined with the other 6 metrics. No single metric is perfect, but when several characteristics align, the quality of the opportunity improves substantially. Instead of relying on intuition, the ranking system provides a structured, objective process for evaluating every candidate. The goal isn't predicting which stock will have the biggest gain next month. The goal is generating consistent income through disciplined stock selection and systematic option selling. Consistency comes from following a repeatable process, not making bold predictions. Successful option selling is about stacking small advantages in your favor. Each metric, including market capitalization, adds another piece of evidence. Today, they help identify stocks that have historically produced attractive option premiums while reducing the likelihood of outsized losses. If you found this video helpful, please like, subscribe, and join me next time as we continue exploring the metrics behind the stock ranking system and how they can help build a more consistent option selling strategy. Before you go, continue your Bull Strangle journey. Visit bullstrangle.com to receive weekly stock selections, option selling opportunities, and ongoing research designed to help investors generate consistent income. For a complete step-by-step guide, pick up a copy of the Bull Strangle strategy, which is available on Amazon. Research, discipline, consistency, income. Thanks for watching, and we'll see you next time.